Hello and welcome to Core Finance. I'm Matt Brown, joined down the line by Ryan Littlestone, who is a trader and an analyst at forexflow.live. FX markets quite active this morning. Ryan, what are we looking at?
We're looking at a bit of chop in euro-dollar today on the back of the German politics, which we spoke about last week. He said it could be an issue over this weekend, and once again we got some weekend headlines that coalition talks had failed. That sort of euro open lower, down to sort of 117.20. But we've had a bounce all the way back up this morning on further headlines that this minor FDP party would join a minority coalition potentially. So we've been around the houses and back to where we started.
Good stuff. Well, before we come on to the euro dollar on the chart, let's have a quick look at dollar yen on the daily. Still around this kind of 112 level. What's your view? What has anything changed since last week on this pair?
No, well, it's again another one we spoke about last week, and I said I've been getting very bearish on this pair, and we saw the move down to 112. There's a strong level just under here at sort of a 111, 70-80 level. We've got a confluence of moving averages down there. It's an old fib level. There's been former support and resistance down there too. And it's looking a very strong level, but we're seeing possibly the protection of that level coming in around the 112 area. We've had a couple of little dips below, but it held steady on late on Friday, and it's holding steady today. And but the key thing is there's not much of a bounce. So you've got to look at that when you hit a big support level or any big level, and you don't see the price move back away from it. That's a signal that there's still pressure on to move it in that direction. In this case, that the sellers aren't letting it get back up again. 112.20 is about as high as we're getting. So it doesn't. For me, the bearish pressure hasn't been relieved yet. We might have had some sort of pressure valve going off in this move down to 112, but the fact that we're not bouncing an awful lot suggests that the sellers are still waiting to step in whenever they get a decent bounce. But you pick your levels at the moment. 112.20 is the top, and 112, 111.90, 5-ish is the bottom. So you go with a break really of either side. But I still think the trend is lower. It's looking very bearish still. So if you get a really good bounce that doesn't come in any major news, then that's going to be a decent rally sell. And
looking at that, you mentioned the fib level there around the 111.34 level. If we see a break and confirmation of a break to the downside of that, where could we go next? I mean, just having a look at the chart, there's nothing really to act as support unless we see the kind of 50% retracement level down at 109.08. That's quite a big drop.
Yeah, it's quite a big drop. I mean, just looking at the chart now, we've potentially got some support, down in the low 110s. We're going to find these minor support levels, these speed humps on the way down. It's not going to be a straight line if we do break below here. But if we do get under that 111, 70 area, then there's a chance that we hit the low 111s first. And you're going to go by the big figures. So 111.00 is going to be where you're going to probably see some support. Depends what the news is driving it. If we just got a steady, gradual, persistent fall, then the big figures are probably going to show support there. But if it's news related, then we could carve through those, and you're right. But we said on Friday, we've tried the top of the range up at the high 114s or the mid 114s, and that's failed. And so it makes sense that we now try the downside. And we're not rallying on an expectant hike now, or the next Fed hike in December. We're not rallying on the tax news. And if you can't rally on big things like that, then really there's only one direction you can go.
And moving on to, as we mentioned, the euro dollar and the moves we've seen happen over the weekend, now trading around 118 level. Where are the supports and resistance, and where can this go from here?
Yeah, we've had previous support down at 117, sort of 116, sort of 85, 90 area. So again, that's a level to look at. The political news I mentioned before that the market hadn't really taken notice of what's going on in Germany, and the only thing that would really kick this off is if the coalition talks failed, and we've seen that. But even so, that's only been worth sort of 80 pips. So, you know, we're not going to see any large collapse. You may see a bit more weakness if we do look like we're going to head towards a new election. But otherwise, down to that low 117 area is where you're going to look for support while the dollar remains weak. And again, on the top side, we've had old levels up here at 118.30 up to 118.60. And again, you pick your levels, you pick your ranges. Look at that for the top and 117 for the bottom, and you trade in between those until they break.
Are you bullish or bearish on this pair for the next few days, or certainly looking at the 4 hourly? What's your stance on this?
My stance is I'm a bit neutral at the moment. I'm still long. I've been long all year. And I'm just waiting to, you know, the ECB was a big event to see what they're doing. And you know, again, we got that news and the euro fell. So the expectation is sort of washed out of that trade. But at the moment, I'm just sort of neutral and just watching the levels. You know, I got a bit worried when we went down and tested that 116 level. We had a couple of dips under, but it had been a good support level previously, and here we are again bouncing. So for me, the long term or longer term, the trend is still up for the euro, and I'm still bullish on that basis. But the shorter term, I'm pretty neutral. And when I get like that, again, you pick your levels, you listen to what the charts tell you, and you trade what you see.
Good stuff. Well, on that note, Ryan Littlestone, trader and analyst at forexflow.live. Thank you very much for joining us here on Core Finance.
Thank you.